Imagine waking up 1 year from now and realizing one small AI stock you ignored quietly multiplied while everyone was busy chasing already famous tech giants. That's usually how real wealth is built in emerging technology cycles, not by buying what's already obvious, but by spotting the infrastructure players before the crowd understands what's happening. And today's story sits right at the heart of where artificial intelligence is headed next: Agentic AI, the technology that doesn't just answer questions, but actually performs actions, makes decisions, and drives real business outcomes. One of the most powerful voices in tech, Amazon CEO Andy Jassy, recently called Agentic AI the future of commerce. And while big corporations are racing to build it internally, one small penny stock is already years ahead with live products, enterprise customers, and partnerships with giants like Microsoft and Google. That company is Resolve AI, and despite everything it has going for it, the stock is currently trading around just a few dollars. Even more interesting, Wall Street analysts have price targets reaching as high as $15. Now, before we dive in, quick reminder, this is for education only, not financial advice. Always do your own research and understand your risk tolerance. But if you enjoy finding under-the-radar tech opportunities before they go mainstream, hit the like button and subscribe, because this channel is all about early momentum, not late hype. So what exactly does Resolve AI do, and why are so many investors suddenly paying attention? Resolve AI is not just another chatbot company riding the AI wave. It operates in a very specific and extremely valuable niche: AI agents for e-commerce and digital commerce. In simple terms, they build intelligent software that acts like a highly skilled digital sales assistant, one that talks to customers in real time, understands what they want, guides them to products, reduces abandoned shopping carts, and even completes checkout seamlessly.
Their core platform is called Brain Suite, and it's built specifically for commerce. Brain Commerce uses conversational AI to help shoppers discover products naturally, just like talking to a human salesperson. Brain Checkout removes friction from purchases by enabling instant one-tap checkout across platforms, which is massive considering nearly 70% of online shopping carts get abandoned today. And BrainPower is their proprietary large language model trained specifically for commerce, meaning it doesn't waste resources trying to be everything like ChatGPT, but instead becomes extremely efficient and accurate at buying behavior, product discovery, and transaction flow. This specialization is actually a huge advantage. Resolve doesn't need massive generic data sets. Their AI is trained directly on commerce interactions, allowing it to operate faster, cheaper, and more accurately for retailers. That's why enterprises are adopting it quickly. Right now, Resolve AI already serves over 650 enterprise customers, and that list keeps expanding. Even more impressive are their strategic partnerships. Microsoft is working with Resolve on conversational commerce solutions. Google selected Resolve AI as a strategic partner specifically for commerce AI due to how advanced their system is. These aren't small pilot programs. These are validations from the biggest players in technology. From a business model standpoint, Resolve is positioned beautifully. They monetize through enterprise subscriptions, transaction-based revenue, and platform licensing. And the total addressable market they're targeting is massive, over $500 billion in global Gen AI commerce over the coming years. The reason this opportunity is so big is simple. E-commerce today is incredibly inefficient. Customers struggle to find what they want, carts get abandoned, checkout is clunky, and personalization is weak. Agentic AI fixes all of that by turning shopping into a real conversation and automated experience. Financially, Resolve AI is scaling fast. The company finished 2025 with over $200 million in annual recurring revenue, far ahead of earlier expectations. Management is guiding toward $350 million in revenue in 2026, with a run rate approaching $500 million in ARR, which is massive growth for a company that's still priced like a microcap. Even more impressive, they expect to reach EBITDA break-even this year, which is rare among early-stage AI firms burning huge amounts of cash. Now let's talk about the stock drop, because this is where opportunity often hides. Resolve AI recently completed a $250 million financing round. Normally, that kind of capital raise is bullish, but markets overreacted because it created short-term dilution fears. The reality is very different. The offering was oversubscribed and led by institutional investors who already believed in the company long-term. And it gave Resolve one of the strongest balance sheets in AI commerce, massive cash reserves for funding expansion, acquisitions, and product growth without financial stress.
In other words, the sell-off wasn't because the business weakened. It happened because traders reacted emotionally to financing headlines, even though the company now sits in a stronger position than ever. Wall Street analysts clearly see the disconnect. Current consensus targets sit around $11 to $12, with highs at 15. Even the lowest recent targets are still well above today's share price. Technically, the stock is also sitting near long-term support levels that historically preceded major rallies. The last time Resolve traded near these levels, it went on a multi-month run that multiplied several times over. But beyond charts and short-term price moves, the real story here is the industry shift. Agentic AI is where artificial intelligence moves from answering questions to actually running systems, managing sales funnels, optimizing checkout, personalizing experiences, and executing transactions automatically. That's why companies like Amazon, Google, Microsoft, and Nvidia are pouring billions into this area. Resolve AI has already built the infrastructure, the commerce-specific AI models, the enterprise relationships, and the monetization engine, years ahead of many competitors. That's what first-mover advantage really looks like in tech. And market research backs it up. The enterprise agentic AI market is projected to grow at over 40% annually this decade, reaching well over $100 billion in the next several years, with long-term projections far beyond that. Most investors are chasing flashy AI chip stocks or trillion-dollar companies where growth is slowing. Meanwhile, Resolve AI is quietly scaling in one of the fastest-growing AI segments with real revenue, real customers, and real profitability potential, all while trading like a forgotten penny stock. Of course, this is still a high-risk investment. It's a smaller company in a rapidly evolving tech space. Execution matters. Competition will increase. Market sentiment can remain volatile. But the risk-to-reward profile is exactly what early tech cycles look like before mainstream adoption hits. So the real question is simple. Will agentic AI truly become the operating system of online commerce, and will Resolve AI be one of the companies that defines it? Because if that happens, today's price could look unbelievably cheap in hindsight. Let me know in the comments what you think about agentic AI and Resolve AI specifically. Do you believe this is the next big phase of artificial intelligence, or just another hype cycle? And if you found this breakdown valuable, don't forget to like and subscribe for more early trend stock analysis. I'll see you in the next video.